Okay, so welcome to this week's deep dive.
Yeah.
Now, before we jump into the fascinating stuff we've uncovered,
Yeah.
a quick heads up.
Right.
The information we're about to discuss is purely for educational purposes and shouldn't be taken as investment advice.
Of course. Of course.
So with that out of the way, let's dive into the world of AI-powered crypto trading.
Sounds good.
This week, we're looking at optimal trading strategies that have been automatically generated for Bitcoin and ETH.
Mm-hmm.
What's particularly interesting is that these strategies were developed just this week by the Zen blockchain AI agent.
Yep.
So we're getting a fresh AI-driven perspective on how to navigate these crypto markets.
That's right.
And you've shared some compelling data on how this AI approached the notoriously volatile world of crypto trading. It's focused on specific technical indicators and rules it developed for buying and selling both Bitcoin and ETH.
Yes.
So our goal in this deep dive is to really unpack the logic behind these AI-optimized strategies and see how their simulated performance compares to a simple buy and hold strategy, something many of our listeners might be considering.
For sure.
So let's start by diving into what the AI came up with for Bitcoin.
All right. So for Bitcoin, the Zen blockchain AI agent came up with a trading strategy that revolves around a single technical indicator,
Okay.
the Relative Strength Index, or RSI.
RSI.
Now, as you might know, the RSI is used to gauge the speed and change of price movements, helping to identify potential overbought or oversold conditions.
Got it.
But what's fascinating here is that instead of using a common setting like a 14-period RSI,
Right.
the AI optimized for a period of 17?
17. Okay, so a little unusual.
Yeah.
So what were the specific conditions that this AI agent determined to be buy signals for Bitcoin?
Sure. So the AI established two key triggers for buying.
Okay.
First, it looked for the RSI value to fall below 30.
Okay.
For you, this would typically suggest that Bitcoin is in oversold territory and could be poised for a price increase.
Got it.
The second condition was if the current price was lower than the closing price of the previous trading period. So it was looking for potential dips where the downward momentum might be losing steam.
So essentially the AI is trying to identify those moments where Bitcoin might be undervalued
Exactly.
and potentially reversing its direction.
Yes.
So once a trade was executed, what happened next in this strategy?
All right, so once a buy order was triggered, the AI kept track of the price at which the position was entered.
Okay.
And crucially, for risk management,
Right.
it immediately placed a fixed stop-loss order at 3% below the entry price.
Okay.
And as you know, this is a fundamental way to protect your capital by automatically exiting a losing trade if the price moves against the position by that percentage.
Makes sense? Smart move, protecting against that significant downside. So how did the AI decide when it was time to sell its Bitcoin holdings? What were the exit signals?
The sell conditions had some similarities to the buy signals,
Okay.
but also incorporated a profit target.
Right.
The first trigger to sell was when the RSI value climbed above 70. This would typically indicate that Bitcoin might be in overbought territory and could be due for a price correction.
Makes sense.
The second condition was met if the price had increased by at least 3% from that initial entry price.
Okay.
So the AI was programmed to either ride the potential upward momentum until it reached overbought levels or to secure a 3% profit.
So aiming for either momentum capture or a quick profit. Interesting. Now for the big question. How did this AI-optimized Bitcoin strategy actually perform in its simulated backtesting?
Okay, well, the results are quite impressive.
Okay.
Over the testing period, this AI strategy achieved a total return of 196.40%.
Wow.
And to give you an idea of the risk-adjusted performance,
Sure.
its Sortino ratio, which focuses on downside risk, was 1.41,
Okay.
and its Sharpe ratio, which looks at overall risk-adjusted return, was 0.58.
Got it.
The maximum drawdown, the largest percentage drop from a peak to a trough in the portfolio value, was negative 42.39%.
Okay.
And the strategy executed a significant number of trades, 382.
So almost a 200% return. That definitely catches your attention. Now, how does that compare to just buying and holding Bitcoin over the same period?
This is where it gets really interesting.
Okay.
A buy and hold strategy for Bitcoin over the same time frame yielded a return of 151.43%.
Okay.
Which, while still substantial,
Yeah.
it's clearly less than what the AI strategy achieved.
Right.
However, when you look at the risk metrics,
Yes.
the buy and hold approach had a significantly larger maximum drawdown of negative 76.54%,
Wow.
and lower Sortino and Sharpe ratios at 0.74 and 0.36, respectively.
Okay.
And of course, with buy and hold, zero trades.
Right.
So the AI strategy, while being much more active,
Yeah.
managed to generate a higher return while mitigating those peak-to-trough losses compared to just holding.
So that's a key difference. Potentially higher returns with less severe drawdowns,
Yeah,
but with a much more active trading approach.
that's right.
Okay, let's shift our focus now to ETH.
Sounds good.
What kind of trading strategy did the Zen blockchain.ai agent develop?
Okay, so for ETH, the AI agent opted for a different technical indicator, Bollinger Bands.
Okay, Bollinger Bands.
As you might recall, Bollinger Bands are a volatility indicator
Mm-hmm.
that plots lines based on the standard deviation of price around a moving average.
Got it.
In this case, the AI used a 17-period Bollinger Band with a deviation factor of 1.8.
Okay.
Again, you see the AI tweaking those standard parameters.
So Bollinger Bands, a way to gauge how much the price is deviating from its average. And just like with Bitcoin, the AI decided to customize the settings.
Exactly.
So what were the risk management parameters that were built into this ETH strategy?
Okay, so this strategy incorporated specific risk controls. It aimed to risk only 10% of the portfolio's capital on any single trade.
That's right.
And implemented a stop-loss order set at 2% below the entry price.
All right, so a slightly tighter stop loss compared to the Bitcoin strategy,
Yes.
potentially reflecting maybe the different volatility characteristics of ETH during this period. So what were the specific conditions that triggered a buy order for ETH based on these Bollinger Bands?
So the buy signal occurred when the closing price crossed above the middle Bollinger Band.
Okay.
More specifically, the current closing price had to be above the middle band, while the closing price of the previous trading period was below it.
Okay.
So this suggests the AI was looking for confirmation of that upward move.
A breakout above the recent price average.
Exactly.
Got it. So the AI was waiting for evidence of an upward trend before entering a position.
That's right.
And how did it decide on the size of each ETH trade?
This is where that 10% risk parameter came into play.
Okay.
The AI calculated the amount of capital to risk on the trade, capped at 10% of the current portfolio value.
Right.
Then it determined the appropriate position size by dividing this risk amount by the difference between the entry price and the stop-loss price.
Got it.
And importantly, to further manage risk,
Yes.
there was also a rule preventing the strategy from using more than 50% of the total available cash in the portfolio for a single trade.
Okay, so that's a prudent approach, ensuring diversification and preventing over-leveraging on any one trade.
Exactly.
Okay, and when did the AI decide it was time to sell those ETH positions?
The sell condition for ETH was relatively straightforward.
Okay.
It was triggered when the closing price fell below the middle Bollinger Band.
So a clear and simple exit signal based on the same volatility indicator.
Yes.
So what were the performance results of this Bollinger Band-based ETH strategy?
So the AI-optimized ETH strategy achieved a return of 93.05%.
Okay.
Its Sortino ratio was 0.79.
Right.
The maximum drawdown was a relatively contained -22.94%.
Wow.
And the Sharpe ratio was 0.35.
Okay.
It executed 75 trades during the simulation.
So almost 100% return with a much lower drawdown than the Bitcoin AI strategy.
Yep.
Now let's see how that stacks up against simply buying and holding ETH for the same duration.
Okay, so this is a really stark contrast.
Okay.
A buy and hold strategy for ETH over the same period actually resulted in a negative return of, my guess is 1.04%.
Oh, wow.
The Sortino ratio was -0.10.
Okay.
The maximum drawdown was a very significant -79.35%,
Wow.
with a Sharpe ratio of -0.08.
Okay.
And as with Bitcoin, no trades.
Wow, so absolutely a night and day difference.
Yes.
The AI strategy not only delivered substantial positive returns, but also managed to sidestep those significant losses that a buy and hold approach experienced with ETH. So as you can see, we've explored two distinct AI-generated trading strategies this week from Zen Blockchain AI.
Yeah.
The Bitcoin strategy, utilizing a non-standard RSI and somewhat broader entry and exit points,
Right.
resulted in high returns, but with more trading activity and a larger drawdown.
Yeah.
The ETH strategy, employing Bollinger Bands and tighter risk controls,
Right.
provided those impressive returns, but with a much lower drawdown than
Yeah.
the buy and hold.
Yeah.
What I found particularly insightful is how the AI adapted its methodology based on the specific cryptocurrency.
Yeah, I agree.
For Bitcoin, it seemed to capitalize on potential reversals around oversold and overbought levels. While for ETH, it focused on identifying and reacting to those volatility-driven breakouts and breakdowns.
Absolutely.
So it really showcases the potential for these automated systems to identify and exploit the unique price dynamics of different digital assets.
Yeah, for sure.
So as you consider these AI-driven approaches and their demonstrated performance, it raises some important questions.
Yeah.
What role could such automated systems play in your own investment strategies?
Mm-hmm.
And what further considerations do you need to make regarding their long-term effectiveness and risk management in the constantly evolving cryptocurrency landscape?
Definitely something to think about.
Absolutely. Thanks for taking this deep dive with us,
Thank you.
and we'll see you next time.
See you later.